You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
Look, we're in an enviable position because we had money. We've had a good summer drilling. 70% of our results are still out there, but we've got approached to buy some Dolly shares. And I think, at the time, the price was is low from what we wanted for it, but the trade-off I thought was really positive.
Welcome back to Mining Stock Education. I'm your host, Bill Powers. In today's show, we're getting an update from our sponsor, Fury Gold Mines, and its CEO and director, Tim Clark. Tim, welcome back onto the program, and it's a good time to talk through executive philosophy of how you move forward a junior gold company in a tough market. You just financed by selling 17 million of your Dolly Varden shares for 40 cents Canadian. Can you talk us through how this transaction came about and why now and why this transaction, please?
No, great, Bill. Great to be here, and thanks for hosting. No, it's a great question, and I think it's a timely question considering a lot of the feedback we're getting on the deal today. Look, we really like Dolly, and we've got two seats on the board. We did sell 20% of our position. We went from 33% down to about 26% ownership. We're still the largest shareholder there. And Sean Kunkun and I work really well together as the CEO of Dolly. Look, this is, to me, a win-win for both of us. It not only helps an investment by bringing in a secure long-term investor into their company which we're still sitting on almost 60 million shares, but it also helps remove some of the overhang and the potential us selling going into February. We have talked about how we're well funded. I was just out in Beaver Creek and Colorado Springs for the Denver Gold Forum. And we're in an enviable position because we had money. We've had a good summer drilling. 70% of our results are still out there, but we've got approached to buy some Dolly shares. And I think, at the time, the price was is low from what we wanted for it, but the trade-off I thought was really positive. We get a secure, basically, financing for the company much longer going forward. We had $6.5 million in the bank, which was enough to get us through to February. But what happens when you get to February and you haven't been able to tap the market? I think one of the things that people forget is that this isn't a portfolio, this is a company, and we've got to basically make these decisions looking forward and outward to run the company first. So that's really how we sort of approached that scenario. I think that the pushback is we sold too early, too cheap. I get it. I hear what they're saying. I just don't believe that was the right decision.
So in terms of market timing, as investors, we talk about the cyclicality of mining stocks and how important it is to time the market. You came from the finance side and the investment side. Did you bring any market timing guesses into what you did here? How does that factor into your decision-making process?
Look, I look at this as a big picture thing. We're in a recession. Rates look like they're going higher. This is not something that's going to turn around tomorrow. We made this mess ourselves and on the back of COVID. My job here is to run the company and build a long-term kind of process to operate and drill and basically look for gold in our projects. So as I look at this transaction, it's a de-risking scenario. It's math to me. It's not. I'm not trying to market time. In fact, I prefer not to. And I think I'm doing the opposite here. I think I've had comments where people have said, oh, you sold your position, you lost control of a phenomenal asset. I don't get that either because we still own 80%, almost 60 million shares of this company. Typically, as a junior company, you don't want to own a third of another company. It not only creates problems for them, but it reduces your flexibility in how are you supposed to manage your own company. My feeling is taking 20% off or just taking what I think is a nominal amount, $6.5 million isn't going to make or break any future funding in terms of performance on the Dolly stock. But it does change the metrics in which Fury can operate. We can basically get back to drilling in the spring. We've got a joint venture that we've just cleaned up with Newmont. We'd like to go after it. So my question would be is like, if I sat here 2 months from now and the market was down to flat, what do I do? Right now, if you're going to go out there and raise money as a company, you're paying 10 or 15% discount plus warrants effectively. We did this for the second time with no broker, no commission. We did it at the market last spring, which was unheard of. We did it slightly below market price this time. I still think it was a phenomenal deal and a great trade.
So, Tim, where's the Treasury at? Let's start there.
We're at $6.5 million right now, so this adds another 6.5. It's not enough to really do a full project the way we had last year's, but this definitely gives us a lot more flexibility. We were planning on running into February and having some money left, but by no means we were going to have to raise money at some point. And I think doing it when you're in a position of having money is a lot better than if you don't, because the way the market looks at these things is they go around looking at the companies that are low on cash and they start beating the stock price up. So, they complain about 40 cents right now as a sort of a low. You got to remember that Dolly was 35 cents the week before. I mean, if this went the other way, now what do we do? It's going to be a lot more costly for us to operate next year. And this takes that whole thing away. And the truth is, I really believe in our assets. We've had a lot of success this year in terms of expanding our resource strike zone. We've got added 20% to the length. We've cleaned up the joint venture. So now we go up there and we don't get any value for that. I think that's a really exciting area. Newmont's encouraged to start drilling up there. That's big step outs. That's big exploration with the number one largest producing company in gold in the world. So I'm a believer in Fury. And as much as I love Dolly, I just don't need that amount of money in that company when we've got a lot of potential upside to explore at our place too. We still got Committee Bay that I think is interesting to go back to. We've hit on a shear zone, which is a little different than what we were expecting with an iron formation. We're going back and we're taking the time to look at our core samples. We're looking for potential partners for us there, or depending on if there's a market that improves, we can raise our own money. Plus, we're having a lot of success at the Hinge. We're stepping out at Extension. We're seeing potential, I think, for a good discovery where we are. And my goal, and I think all our goal here is to have this at 2 million ounces next year, 18 months, and being able to monetize some of the other assets we have and keep furthering. We've got a huge property up around Eau Claire. We've got 55,000 acres or hectares. We pulled off 3,000 samples in the Clarkey, which is over to the east, and we're hoping to have a lot more targets. So again, love Dolly Varden, but I love Fury too, and I think this is a good use of funds.
And remind us again the catalyst that we have coming this year. You have the overwhelming majority of your assays still to be reported from this year's drilling, right?
Yeah, we've got 70% outstanding. We've got a lot more. Our drilling is coming to a close. We're going to get about 18,000 meters where we were expecting to get 15,000, but we were under budget. We lowered our cost this year by 30%. We're all working remotely, so we're not spending a lot on office space and whatnot. We're ready to go at it. I think this year drilling has really given us a lot of insight of how we want to approach the rest of the drilling, but we just need some time to catch up and get these assay results in. We'd like to have more results out for investors to take a look at. We don't know what they are yet, but we should have results coming through as late as sort of end of January, beginning of February. So potential news there.
Excellent. And we should know you cut G&A significantly, and you basically brought in your whole network with you into the Fury stock too. So you have a little bit invested in this.
Yeah, it's like, again, people would sort of question what we did with this fundraise. I've put a lot of my own money in this. I put a lot of my family in this, and I based my reputation off with a lot of my institutional friends to buy in this. Look, they're all underwater, and so am I. I'm making these decisions to add value as best I can to this company. We're a open format company where we all talk about this together. This is not a one person scenario making decisions. This is everybody's got an opportunity to voice an opinion. We've circled these decisions together, and it's made it a better company. And I think it's a lot different than it was than when I took over a year ago. This is a place people want to be at, and I think there's a lot of enthusiasm for the year and what we're going to potentially do next year.
Okay. Well, the website is furygoldmines.com, and ticker symbol is super simple in Toronto or New York on the big boards, FURY, if you'd like to check out the ticker. Tim, thank you for providing this update today.
Thank you, Bill.